today we're going to take a look at the Nasdaq, at the XLY Consumer Discretionary ETF, and Tesla. Tesla's got an investor day tomorrow, and whatever volatility could accompany that, let's see if we can't get a setup in these three related markets. And remember, Tesla's heavily weighted in the Nasdaq as well. It's extremely heavily weighted in the XLY ETF. So there's a really nice synergy here with these. If you don't know me, my name is Raghee Horner. I'm the lead trader at the Simpler Futures and at the Sector Secrets Mastery Services. And we're going to take a look at three symbols that are absolutely on my radar for tomorrow. Okay, we're looking at the 1 hour and the daily time frame of Tesla. And you know, whether or not you like to go top to bottom or bottom to top, whether that's stock sector index or index sector stock, it probably doesn't matter. I do like to take a look at a top-down approach, but as long as you cover all three bases, you're good. Tesla has a 1 hour bullish bias that's most recently gone neutral on the multi-trend. That's that yellow color, meaning we have a bullish overall expectation, but now we can use things like the slow stochastic, our slow stow right there, to find when we reach this low area and possibly this Darvis area here for a potential buy. Now, that's not the only buy level that I'm looking at. I will also look to the DPMR here on Tesla for potential support and another buy zone. So there are two buy zones here. They're completely separate, but they both have a defined, well-defined zone that we could look to get long from. And I don't want to ignore the 200 propulsion here right at 200. So there's a lot to like here when it comes to how much volatility might we get and which level would I like to buy Tesla from. And again, I don't have a bearish bias because, again, look at the structure. Structure dictates strategy. Another reason why I don't have a bearish bias is the structure on Tesla has been up on the daily now since, as you can see, the first week of February. That means, again, when we have bullish structure, again, that multi-trend right down in here showing green. And by the way, why is it green? It's because the 34, the 21, the 13, and the 8 exponential moving averages are structured in such a way that the path of least resistance is higher. Now, this is going to require a pullback, and clearly we can look at that DPMR right in here for a long position. But I want to show you another thing we can look at, and this would be a mean reversion on the daily time frame of Tesla. So what that means is I'm going to be looking for an uptrending structure daily time frame to pull back to the 34 EMA wave. That's this right in here. So that would be a mean reversion. Are we likely to get down to 180? Probably not. So that's why I'm talking about a lot of the alternative levels. You know, who knows? We could see that kind of volatility. The Darvis is kicking in here as well at the 192.5 level. So a lot of automated levels that could give us better clarity on where we'd want to be buyers on Tesla. Things will get really much more bullish if we can finally take out the 200 propulsion on the daily time frame. That's the difference between being in the bullish versus bearish hemisphere. That 200 is a really important one. I consider it the equator, especially when applied to the daily. All right, but how does this play out on XLY, the Consumer Discretionary ETF, where the number one weighted stock is Amazon, the number two weighted stock is Tesla. By the way, the number 3 is Home Depot. Do I want to be a buyer on XLY? Notice that Tesla actually has better structure, better bullish clear structure than XLY. So I'm going to favor Tesla. XLY staying supported would be helpful. And heck, even Amazon staying supported would be really helpful. But I'm much more interested in what Tesla could bring us in terms of structure. For those of you that are wondering, hey, Rod, can we see those DPMRs on Amazon? As long as we're talking about it. Yeah, I don't like the structure, though, and we're nowhere near those zones. If we can find a green multi-trend reading, that's going to be what we're going to favor. All right, let's take it on over to the Nasdaq. What is going on with the Nas? And ultimately, when it comes to the Nas, what we want to keep an eye on is, of course, support, right? And then why? Well, right now we're in chop, but the trend that preceded the chop was up. Right now, again, we're in a neutral underlying environment. However, the slow stow is down here near the low, right? That's what we're looking for, near the low, near that white line. When the multi-trend is yellow, you want to use things like a slow stow. You want to find overbought and oversold levels. Overbought is resistance, oversold is support, and it's the latter that we're close to. And then if we can get movement to these lows or the DPMR, we're in business. So I'm looking for a lower low. I'm looking for support to be a buyer of the Nasdaq. This could include the QQQ calls. This could include the MNQ micro, but I'm looking to get long. And you notice that all of these are aligned in the same direction. That's the type of synergy that we're looking for. And you can see why we're expecting volatility, that investor day for Tesla. And then even minus the investor day, we're still looking to get long. So if I was talking to you on Wednesday, the levels might be a little bit different, but the directional bias should, for the most part, remain to the long side. That's what's on the radar for me tonight. I'll see y'all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.